Hello, welcome to the stream. I did do TNA NH last time. I don't think you were here for that. Um, I did it. I did do it. Mm, I don't know where it is though. No idea. TNMG was one that we looked at. I think that was maybe one that you had called out, or somebody did. It dropped to 28 cents. I wanted to see it go low here, maybe even a little lower, down to 26. But that's a good one. May have a rebound in store soon, or it's just going to dump off a cliff. I mean, either way, um, would be fine. I'll do one, and then I'm going to go to. I'm going to go into. Yeah, I don't know about this one. This is not the chart, obviously, but it's AMC earnings today, and I'm going to sort of update everybody one more time. I don't know. The chart doesn't really change that much, obviously. Each time we do things, it's not like it's radically different, but sometimes that subtle changes or like little things. I mean, you give them more information, and more information is never a bad thing. So if you have more information, then you're going to get a little bit better line work, a little bit better clarity. One of the things that's been coming up a lot in the last week, and I shared a little bit of this about AMC on the Discord, was $8, 891 specifically. It's a really specific number, but it is a sensible target, and I'm finding it more and more often. It reminds me of some, the $8 targets I was getting way um, back in the day. So, all right, let me see here. So we've dropped the floor. There's not really a great long-term outlook for this unless it comes back above $1.60. Uh, this one has potential, I think, to reverse. And I think I did the chart last time. I had it ready to go, and I don't know where it is. I didn't save it or something. So that's kind of the most extreme creek I can draw right there. The other one that's probably more important, it was made with a series of these upthrusts after the big one. I don't often include, I know the buying climax can be part of that, but really if you think about where does resistance build, you can kind of soften your eyes and just sort of tell. You don't need to have like the best lines in the world. And really the main resistance is clearly like right here. And you can see it's lessening over time, so that's also an important factor because it's having more and more like lower, pushes, but they're not really advancing even much here. There's like a little advancement, but previous ones there's no advancement. If you look at these two to the next, so it's not even going back and rechecking those lines. So it's essentially like a parabolic move down. Well, doesn't that mean that the creek is like a curve? Maybe. I mean, like AMC's got a nice curve right now. You can draw it. We're not doing AMC right this second, but we will. And you can see the AMC, that this kind of a curve right here could be thought of as like maybe a better representation of possibly where that is. But you know, if you're doing any kind of liquidity mapping, you really would want to just focus mostly probably on these two marks, not that steep one or the other steep one. This to me is a good average of where it is, and I'm going to look at where the clutter is right there and the clutter is at the end. So is really where it stopped. The rest of these are all up thrusts. And again, they could play a little role in this, but ultimately that seems to be the most critical point. And in addition to that, I would go even a step further and then say, well, where did it actually break down? And you can see there was like a compression here where this was rising. And again, it's like pretty straightforward. Like everything's kind of intersecting right here around $1.60. So do I think this is a good trade back to $1.60? Maybe. The problem with any of this stuff is that if you flip the chart, right, if these are making some pretty huge moves, at some point, yeah, this may reverse, and it could be as simple as just tracking the trend here for the reversal. But just remember that, like, much like a top that's made, the market's going to naturally try to go back. Every time it makes like a new high or a new low, there's an ebb and flow to the market, and one of those things is just that idea of like we're hitting this, we're kind of, pushing forward on this wave, and we're hitting this target, and then we're backing up. And we're going to push forward again. And that's really where the day trader or the swing trader makes their determination about strength. You're looking at volume on the second push, not the first necessarily. And then so on and so forth, and it can be a little tricky because sometimes you might think it's going to consolidate and reverse, but that's why you wait for confirmation. So like here, there's this push, and then there's another push, and then another push, and it's just a consolidation. And it isn't going as far, but it's also not reversing. And that doesn't tell me enough. It doesn't tell me that it's definitely going to change direction. So you have to kind of think about things as like, is it strength, is it weakness, or is it kind of neutral? And if it's neutral, there's really no point in trying to, in my opinion, in trying to guess. You might as well flip a coin. And if you're not really able to read the volume, and the volume's not changing that much, like I would just assume it's going to stay with the trend until it doesn't. But that's kind of a neutral consolidation, and then it pushes again. So like right now, there's really nothing that stops this from just going sideways here. I mean, you have, oops, I didn't mean to do that. You always have the possibility, of course, of a trend break, but even then it's like, yeah, but they kind of established a new standard, right? So there's just a lot of little things. And at the end of the day, it'd be a lot easier most of the time to just wait and not try to, catch the bottom. Unfortunately, when you get into like penny stock territory, tends to be that I think that it's really hard to catch it because the breakouts, because a lot of times they happen in extended hours and just suddenly they're up 30% or something. And that just, that's up to you if you want to cost average or whatever and just buy until it breaks. But you could end up wasting a lot of money if it doesn't ever break. You're in trouble. So yeah, I mean, this is not that complex. I think that you would wait for 130 to break. That's going to be a confirmation of a lot of things. And specifically, I'd probably even look at this guy because I don't know when it's going to happen, but I might even look like further than that because that could be a fake out even. I might do it like here, if it went the other way, wait for this trend to break just to have some more confirmation. Then I'm like, yeah, I'm good buying and holding till it comes back up and retests. That's not a huge move. I get it. And you're not very, entry's not like perfect, but it is a better place to be. So like flipping the chart, you can kind of tell like there's not really any stopping this right now. I mean, it did hit a low on RSI, made a higher or a lower low, but this is also like a 1 hour chart. You might have to take it up to 4 and see if that's still there. So it could be thought of as a little bit of a divergence on these two bottoms. But again, divergence is only good if it follows through. So in order for this divergence here to follow through, it needs to break, right? And it needs to continue. And that's very much like a common sense kind of thing, but it's really easy to kind of assume that it's going to go, and it just doesn't. And yeah, and that you kind of lose your edge there, right? If you think that that's the right entry, you're really just kind of gambling on that. So it's a frustrating play because you're not likely going to hit it perfectly on your entry. It just seems unlikely to me. Other people use other metrics for things like this, and I don't typically look at much else. So there are some things I'll look at occasionally with with hindsight to see if there's patterns, but for the most part, this is pretty straightforward again. The breakout needs to make a higher high, so it needs to kind of push and advance. And then I look at tops here, and I think there's a top at like 138. And then I just would wait and see if it holds. And if it holds, then you've got a much better likelihood of just moving forward. This should also break. But a lot of times, again, the RSI might break the creek early. That happens quite a bit before a reversal. So even if this follows through. And then big picture, I don't want to go too far and say this is definitely good, but it looks okay. There's a push up here that I'm not too crazy about because it came pretty high, and I don't really know why other than it's just selling. Like somebody really wanted to get back to this split value. You can see like both of these markers come back up to where that split happened at 350. So I'm guessing that's more likely just distribution. But in theory, this is a 1 and a 2. So if you had a jump over these creeks and it held, then in theory you should have a good advancement. If it can hold here, I think you could have a pretty strong advancement. So again, that's the other creek that we were messing with. So none of these are particularly one-off kind of, hey, if you buy right now, it's going to go to like, such and such. I don't think that's the case. But if you have patience, I think this could be a decent play. So I'm not convinced yet. I think it's already back tested a lot of these. And yeah, pretty much all of these parallels have been back tested already. So, I mean, there's not really anything that's missing that I can see. Nah. Yeah. So you've got to just sort of take it for what it is. Basically, I'd be looking at one liquidity shelf to the next, probably about even space there like this. And that's about as far as I'd take it. Wave-wise, I don't think it's in a bad spot because if you look at this as like a kind of a duplication of what happened previously, once the sell-off was done, you do get some pretty nice moves. And it certainly could be very similar, where this is still going to go down quite a ways and then have some big push-ups back to like the 140 area instead of going higher, breaking out. But for now, yeah, and see how even this guy, I was just kind of estimating this guy goes back. This is a much better creek. You said $5 check was missing last time. Yeah, like there is one in extended hours though. So it probably wasn't in extended hours, but this is the back test right here around 5. And I can see that in extended hours. So I don't know if I'd put a lot of emphasis on that. I would just say that like, that's there. If it only happened in extended hours, it's possible you're going to go back there, but for every time that happens, there's another time where that doesn't happen. I can't really guarantee it. So, somewhere around there. Yeah, I mean, you could just tell. Like, these are both pushing back up towards it. So, I don't know if... Maybe it was without extended hours on. It didn't make that move. There's other things we could do here, but, like, for now, like, this is kind of the basics. It's pretty straightforward. And I think that, again, this isn't really me specific. It's just looking at, hey, it needs to come back above 160 if it's going to have any real strength. Buyers will step in there and probably take it up if it held support. But then beyond that, I don't feel like this is a very simple trade because my guess is this is kind of long-term. Yeah, roughly long-term been the creek here. So it's going back pretty far. And that's why I'm not sure. It's like all the stair steps are really happening underneath it. So it would be a bit unusual. And again, maybe my angle is like slightly off here, but it would be a bit unusual to have all of a sudden now, just because we're looking at it, to have it break, you know. But certainly that does give me more clarity because it tells me anyways that there's a possibility that this really is in a distribution that just likes this spot to sell. I mean, you can see this long term. So, yeah. Again, I'm kind of like stretching it out because I'm trying to see if I can pick a better line. I was pretty close with my estimation. So anything, definitely now, I would say anything above that 160 looks really good because that would be out. And long term, and again, there's been splits on this, so it kind of negates some of these liquidity levels. It just does. I mean, I know that I get the idea of a split being equal parts, but it's a psychological level too. And if you think about this in the past being like $30 instead of being $4, it's kind of different psychologically. So, yeah, anyways, so there's a definite wall there. I think they've extended hours. Looks like they back tested them both. It's oversold. It's like some of the others that we talk about. I mean, like once it gets, if it's a penny stock and it's extremely oversold, just look back and see if it's not that oversold yet, but look back and see where the bigger moves were and how long it took it to correct. Some of these, man, they just kept going down. Like this went really low while the RSI is moving divergent. The same thing happened here. This just kept going down. I can tell the RSI is just going up. So it took a really long time. That's extreme. That's 4 hours. It's like a decoupling almost. It took a huge amount of time to create that divergence. And for all we know, this is just entering into like this early kind of walk down stage. And we could end up slumping here and then heading down to below $1. So, nope. I can't do any more right now. I'm going to do just AMC because I only have 45 minutes and I'm not going to stream earnings. So I just want to get through this. And you know me, it takes a little bit of time. So that's the one I picked. Sorry. All right. So what you're looking at looks kind of new. It looks kind of similar. It's a little clownish with its colors. Basically, you have a waveform schematic here that I'm messing with. This isn't terribly different from other things that I've done before. And I don't really have time to explain exactly how I got here, but what I will say is that there's a very strong similarity in terms of, and it looks really weird because it looks like this parallel is like off, right? It looks like it's way off. But what I found is that there was a similar setup in 2020, which we already knew. That's nothing new. But there was a similar setup with a parallel structure in 2020. And it started really different. This chart started almost like completely different. I was looking at, and you guys are like, well, why don't you just keep this line, right? Because you're going to see it in a second. You're going to be like, why don't you just keep that one? So I was looking at this other structure, and I was checking it out to see if it told me anything different. It's this guy. I'm actually prepared today. And this is what it tells me. And I already kind of knew this because we've had this creek for a while. And I looked back previously and I had talked about how there's kind of a run back, if you will. If you go all the way back here to this area in November 2018. Again, long story short, I once upon a time did an analysis that made me conclude that that time period right here was when the operators ultimately like started putting their hands on it. And I think that when you look at BlackRock and Vanguard, they're very long-term operators. That doesn't mean there weren't other operators who were, and obviously it went down first, but that this was a clear breakdown may have enticed a lot of bearish operators when this is like a giant LSPY to kind of start walking it down, especially your shorts, hedge funds. So long time ago, I theorized that might be part of this. But this creek right here runs through, and I know it looks like it might be slightly off. I'm not going to say trust me, bro, kind of stuff, but just in this particular example, just trust me, because the reason I did it like this actually was quite interesting. I started looking at that kind of middle noise, right, and seeing how that variation went. We have something really similar earlier, which I shared previously, which was the June and July top over here. They're really, really, really similar. They're almost the exact same marker. So it's basically the same thing as that, except it's like extending backwards, okay, in time. And specifically, like this middle would be kind of a macro creek. It makes perfect sense. If you look at it, you might say, oh, well, if anything, it's slightly off because this is higher and then this back over here is a little lower. But as an average, and then looking at where we are now, it certainly looks correct. I think it's a very close line. If it's not perfect, that's okay. It really wasn't, I wasn't sure what to make of this anyways. But what did tell me was quite interesting, which is I looked at specifically like what happens if this hits $1. I was just curious. Why do you have morbid curiosities like that, Booksy? Well, here's part of what made me curious about it, because when I looked at this, I realized very quickly, as you can tell, all I did was I expanded out the center, right? So like the Tootsie Pop roll center, and just kind of expanded it out on either side by certain variables. So first I picked this variable here, which was the top of August 2023. And when you reverse it, it gives you the bottom of February in 2024. So that's how you get those. Then I did it again, and I picked the bottom of April, and that in reverse gives you pretty much this hook value at like 2050, which is where the split happens. When you do that, interestingly, that 2050 on the parallel structure goes back to the May 2021 breakout. And then the bottom here in April, again, this is not necessarily brand new. This is pretty close to some other stuff we've done before. So I'm not saying this is brand new. Just, again, bear with me. When you go from the bottom here and use the parallel, it goes to the breakout. So what I found very curious was that the distance from the breakout in 2021 and the breakout in May of that same year, that's the full distance of this channel. And when I went and looked at where does this hits at 1330, right, in extended hours. It's almost the full distance of that channel. Now, curiously, and I don't know if I did something wrong here, if you bring this down to exactly where that gap starts, it goes right to 1330 top, almost like perfectly, right? So then it was like, well, why don't I just do that? But then what happens is that it compresses the rest of these. It doesn't quite work because you have to bring this one up, which doesn't match the bottom anymore, right? Or you just have to pick a new center. So I was like, maybe I'll just see what happens here and then I'll go back. So I'm just telling you that because technically, like, I know it's off. You guys are like, well, it looks like it's off. I know, it's off. If you pull that parallel down, it does match where the gap fill is. That could just be, again, slight miscalculation for me doing these. I don't know. I did it pretty close to what I felt was perfect, but I probably could go back and fixate on it a little more. Point being is that the rest of this then has a little bit more context because you can see that every one of these that's been pushing up obviously hasn't succeeded. We also have continuity in that these beginning and ending push-ups, right, pretty much match what we expect to see on an iterative move here. Now, at first, this might be very discouraging because you might be saying, well, I don't really want to see this do the same thing it did over here. So, like, isn't this a bad thing? Again, remember where you are in the context of a range. This isn't the same place. It's certainly not impossible. And if it did do the same thing or something very similar, you might expect on earnings, for example, this to hit like 265. That's a really key number anyways. And then attempt to do a drop down through the floor. Okay? That would be sensible for an earnings move here based on this chart. If it has a pop and drop, that would make sense. If it has a drop first, obviously the floor is in question, the 246, the 239. I'm going to include some weird numbers here, but I'm going to include 217. I'm going to include 226, and I'm going to include 178. Those are kind of my key numbers. And I don't really care which one it hits. I've told you guys before, it's not biased for me just to say it goes to one or the other. It really makes no difference in my mind because I'm thinking about I don't know what the mind of the operator is, and ultimately I found all those targets in multitudes of different ways. So they're just there. They're recurring targets, and I don't really find them to be particularly interesting one to the next. They're just kind of there. Each one has their own little quirks, I guess, and that's all. That's all there is to that. So those are the numbers. Again, I would look at in a drop. Besides the 246 and the 239 bottoms, which are more or less obvious, I would look for 226, 217, and then 178. Those are it. That's it. Those are my three numbers. I'm going to stick with those three. I don't know if anything else happens here that goes way south. It's not impossible. But anyways, so I was looking at this and I was like, all right. So for instance, right now, one of the positives, I suppose, of this setup would be that if it were to go up again, this deviation right here, this is basically you're sitting on the middle. If it were to go up again, you wouldn't expect it to necessarily move just to the next marker here at 537, but I just tried to see what it was, right? So what I did is I basically did like a 50-50 here, and it is very, 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 very close from where we are now down to $1. It's more like $1.06, which is bizarre. But that is very, very close around the 239. And then again, curiously, I was like measuring out the distance there, and I said, well, what happens if you go all the way to 1? What would be the furthest distance up you would go? And if you do the same measure, like bottom to top here, and you do it from 1 up, you would get $5.39. I don't remember $5.39 specifically being very important. I do remember $5.32 coming up a lot. So I'm not really sure why 539 or 540, but it is there. And I went back and looked at the, you guys are, of course it's there, it's a number. But I just went and checked and I was like, all right. Even if I'm off a little bit here, which is possible, there's certainly like a key moment here in January on the 8th and 9th. This marker right here and then the marker right above it at the very beginning of January, both of these I think are very important. I do think they basically define where the top is on this range. And ultimately, we talked about them previously. They're really like very predictive of a lot of things for certain reasons that I'm not going to get into right this second, but I'm looking at that. I'm just looking at that as a 50-50 down. It goes to about 1, which is, scary, but it's there. Here's I guess the plus side of this, if you will. That same movement to the upside, in theory, I can't be positive about it, but in theory, if it made the exact same movement, which you might think that's not possible, but in my mind, I'm like, it's been going down like this for like years. I don't really think in terms of impossible. I just kind of think, all right, what is the value there, right? And kind of judging based on where I think it may go, and I had gone to like down to like 178. I tried that one, really not breaching like $10. And of course, if you're already aware of this, but this area right here, which was the previous top zone, is around 10 to 12, and it's ultimately, I think there's like a pretty significant marker at like $11.10. So we are positioning in a place where even if you got a decent spring here and you went down to like 178, which is pretty low, the same move, assuming that you got the exact same move, the same move would be a solid enough 50-50, around kind of one of these variations, and then it would take you up to about $9 to $10, which is where that gap zone is. And I'm looking at that like, all right, whatever. That doesn't really answer any questions. It's just kind of there as like a bracket. And I looked at, then you're going to be asking me about these other parallels, like ones that go up. I looked at those, and I thought this would be a curious exercise, and I was surprised by what I found, which is that when I did the first one here, which was really a mark from bottom I don't know if you can tell, but my mark here goes from the bottom of April through the peak, but on the variation in May, which is 2025, as opposed to April 2024. When I did that, I started then copying the marks, and then I copied it 1, 2, 3 times. And then when I started to copy it again, I just looked at different positions. And then I looked at here, 1, 2, 3, and then I did the other way, the same, so that it was always, and it, as you can tell, and it makes sense to some, on some mathematical level, this does make sense to me. As you can tell, this creates a parallel structure, okay? Now, one thing that I would caution here is, again, using this to necessarily be prescriptive of like what happens with the stock. However, the one that stood out to me the most was the one that I did first, which was this middle marker. And I thought it was really interesting because this ultimately, while it's not perfect, this ultimately starts where the gap up was, and it ends on that drop that happened in September. And I'd been contemplating using that region right here as sort of like the peak of an S curve, if you will. And I'm like, okay, well, that's interesting. I haven't used that very much in my own analysis. I haven't used it a ton, I would say. And so I did think it was interesting, and I wanted to make a note of it. Also of interest was the fact that this crosses down through that middle, and it technically breaks from the middle on the other parallel right at January again. I thought that was really curious because January is the peak RSI low in this range here. If you don't count the beginning, this is the only other place that the RSI is significantly low on the 4-hour. So I was like, all right, well, this is pretty fascinating. Like, they're using this as a kind of anchor for the market move. So maybe the idea of this head and shoulder coming up, and I don't know if you can see that, it's slightly at an angle, right? But this idea of this like buy-in here, and you can definitely tell it looks like a head and shoulder rising or something. Really, that breakdown is in this kind of squishy middle that we like to call that, where it's got a lot of chop. That's really where the sellers, and I would say smart money, chose to take it down. Now you might say, wonderful, so you've just confirmed what I already knew, which is that it dropped the floor right there. Really smart, Booksy, is kind of a waste of time, right? But I don't think so, because the fact that there's an angle there that drives all the way back to the original markup period, I would not discount that so quickly. And so what I decided to do was I was like, well, I need to see if there's any kind of resemblance here. And what I did find, again, curiously perhaps not, and I kind of marked it off here with 2 little arrows, was there's a correlation to where that gap up was in May 2020 and where it finishes in May 2021. And I'd previously told you guys I thought this was a 2-year cycle. Now, you might be saying, well, that's debunked, right? It has to be debunked, right? Maybe. It might be debunked. And I'm not really sure yet, because one of the arguments that I had made was that it could be at an angle. It may not actually be horizontal. It may be downward. So it may not be flat, and therefore if we get a breakout, it may not go that high. If it's on an angle, it's like shifting it, right? Like skewing the chart down. The other argument that I made was like, I didn't really know where the 2-year cycle may have began or ended. So I had estimated it was probably between August 31st and maybe at the most October 4th, although I argue that I thought September 11th was probably a better bet since this rate hits the first low. Now, that being said, it actually exits this range in November, at the end of November, exits this top range. And I don't know if you remember this, but there's and this is kind of where things get a little bit dicey, I suppose, because I don't want to be overly, what's the word? Suspicious, I suppose. I guess if you recall, like I had measured this 2-year from this breakdown here in June, and then ultimately it kind of comes back to this idea of like, we're going from like, well, it's really like May right here to May. It's a 2-year window. And it's really close. But this is actually like a breakdown, right? And if you look carefully, I don't know if you can tell, but there's a second LSPY right here. And then this is a breakdown that then hooks, and it basically then goes into like this kind of generative drop. This is basically like a sliding M, okay, an S curve, if you will. You can call it cat ears if you want. But this would be like the end of the cat ears in this particular instance where there's a hook, and then it drops, okay? Now, I hadn't really used this area as still being included in the top. So just to be clear, I didn't think that, let me show you by just drawing. So let me show you why I didn't use that first, okay? And then we'll talk about the rest of that. So I did not assume that this was actually still inside of here, as in the drop was, if that were the case, then wouldn't the drop be when it actually leaves, much like it is here? Because we were just talking about it. I mean, I'm not being intellectually dishonest. I'm just being honest. Like, this is what I'm saying. If I believe that this is actually still inside the range, then I should be using the marker when it drops, which is technically November, not August. If I don't think that's the case, then I'm including this LSPY right here at the end. It's kind of like the latter one, right? That's the late one, and this is already broken down, and then this is a hook, but there's just noise in between. You can't really measure that, Booksy. You're not good enough to do that, so it is what it is, and you should have started correct from there, and it just ends up being wrong. Okay, fair enough. Well, lately, I've been playing with the shift values, right? And I've been talking about those variations quite a bit on the stream. And again, this is the one that I had marked off, which at a time made the most sense to me, because I was like, well, really, shouldn't this be where it is, right? And I did the math for it, and it looked correct. And I'm like, yeah, this still seems pretty right. I did something a little weird the other day, which was I added a new measurement to it. I'm gonna do this, but I'm gonna try to keep it a little bit tidy. So what I did is I just added like another one. I was curious. All right, I was thinking to myself, well, that 2636 number makes sense as a multiple. I was like, I wonder if it just makes sense as a divisible number, like a percentage of the whole, instead of being 100 plus that percent, or 226%. So I did that. And what I came up with was quite, again, quite interesting, perhaps. And I think that it'd probably be better to illustrate it on a different chart, but I'm not sure if I have another one pulled up. So let me see. I'll try. Let's see if this one has it. Yeah, so this one already has it on there, but I'm just messing around with it. I'm not sure if I left it on here or what. Right, here it is. So I went and I did it with a 2636 variable down. This kind of hurt my brain a little bit, because when I did it this way, I was like, it actually, instead of it being like a breakdown, it still matches. Like, you can tell this is almost the same line. It's not the same, because obviously the other one we had was a little bit steeper, because it would have caught this, obviously both. This is a little different. So this is the different marker. Just be aware of that. But when I did the 2636, I was like, that's pretty interesting, because that really makes it look very different. And I thought that was curious because it aligns what happened, like collapsed what happened in 2021. It kind of collapses that and places it on the exact same marker that you would have saw the breakout in May. It also changes the dynamic of this quite a bit. Now, the reason I did this, I know this is getting a little long-winded, but I'm getting to a point, because I wanted to show you at least a little bit of why I got to what I got to. But what I did is that I measured out, like, from the breakdown, I was like looking backwards, and I thought, well, this measurement here and this measurement here and blah, 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 blah. Should I be measuring this whole section? So basically from the LSPY that happened here in September 2017 all the way through the breakout in 2021, should I be looking at that and considering it? I mean, in some ways, yeah, because that is where it goes. I mean, this is like complete full circle. So in some ways, it's like, well, I haven't really done that. I've never really measured from way back here. Kind of seems pointless, but that is where the breakdown happens, and then this is a backup. So similarly, you can see that what happened here was the breakdown. It continues. It's kind of the same thing. We actually start really a breakdown technically like way back before even August 2022. It was like May 2022. That broke through that same marker. And you can see the hook value here in November. Now, we could talk about all the other crap that goes with that, but the point being is that that breakdown really starts and originates way back here. And if I were using the same methodology, this is where things get a little bizarre. But I were using the same methodology, and we had never had any kind of a weird chart shift or anything, I'd probably be using this area much the same that I did here, because, technically it's the same level, right? So on and so forth. So it kind of begs the question, like, when you're doing these measurements, I'm talking to myself, not you guys specifically, but when I'm doing these measurements, should I be measuring stuff from way back here, right? When I'm trying to do comparisons to what happened in 2000 and whatever, right? And if you're wondering, that value, that breakdown value, if you make it the same, this isn't going to surprise people that are not easily surprised. But if you make it the same, it's roughly $20. And if you get more precise with it, it's like the $19.60 march. And I've been like kind of quietly over the last year talking about 1960 quite a bit. Not a date, it's just a number, because that's where the gap is. And it's a very strange phenomena here to think about it in terms of like one or the other. So this shift is actually bigger than the other one that I did, significantly bigger in some regards, but it has fairly like almost the same kind of consistencies when you do it. And again, if you look at where the Judge Zerny kind of stuff happened and the drop, it's right at that $11 mark here. So that drop becomes like the $11 mark. Here's what that would change. Fundamentally, what that would mean is that instead of measuring from August, you should be measuring from this area, which goes, of course, from November to December. And there's a lot of chop in there, a lot of debate perhaps about what would maybe be the drop. But specifically, it'd be like around the 17th. The guy in my Discord has been talking about the 17th a couple times, and I'm like, yeah, you could be right about that, because it's starting to pop up quite a bit in my analysis as well. And I find it to be a very strange date, because it's not one that I would have picked out before, but a 2-year cycle to the 17th would get you, obviously, to where you are in this particular year, November 2025, as opposed to November 2023. So what's the difference there? Well, it would assume two things. Number one, it would still assume, and I do mean that, it would still assume that we are going to do a 2-year cycle. Number two, it would also assume that I was wrong about the shift value, or it was the multiple. It was a variable, not it was a fraction, not a multiple. And I do think there's some credibility to this, although I don't think that it would be easy for me to prove it or disprove it, because if you look at where this is, and we already know, but if you look at where this is, it's the difference between, and you won't be able to easily tell it here, but it's the difference between like the gap and the final bottom here being either equal to or in the middle of. So again, it may be a little bit confusing, but if you remember, and it's going to be hard to show this perfectly, I'm going to do my best. I'm just going to give you what I think is correct, because I'm pretty sure I know where it is, but my internet keeps up with me here. I wish it didn't do that. It like compresses it. Oh my gosh. Like micro moves are causing it to spaz out here. All right. Well, this might not get much better, so I'm going to just kind of get it close enough. That was probably close enough. All right, that's close enough. That's probably right. Yeah, that looks right. It's basically the difference between that gap being here versus here. Now, you might say like, well, what difference does that make ultimately? You can see it. I mean, you can see visually like this would be like a hook beneath that trend. And it would also mean that we've already kind of back tested this level multiple times. And we wouldn't really need to back test again, if that makes sense, because this already came back up and checked it at like 13, unless we're going to go all the way up to like the 19 and fill the gap. Aside from that, the gap fill being the same, which is great, it does change this because this dynamically would have no need for, again, this would have gone up all the way and filled the gap already on the Judge Zern area just by going to 1330. I do find it to be very compelling because we never went, and I don't know if you guys remember this, we never went up, we never filled this gap completely. This is like a 1380 gap, I think. I could be mistaken, but if I remember right, it's like 1380. I thought it was really weird that we didn't even fill like the 1380 gap. I was like, why didn't we fill that? You know, like it was right there. We could have filled it. And then like they didn't even do it. It was already in extended trading hours. Like it had zero consequence for most of us because it didn't open there. It opened at like 11 something. So this is one thing that really kind of 1190, right? Or whatever it was. So this is really bothersome to me because I was like, I don't really get that number. And I had said at the time, I thought it might go to 14 because of that gap zone here. I was using this, but it never did, right? When you use this shift value, it does give you less reason to go all the way back up to 20. And it also means that that was actually a back test on that Judge Zern gap in terms of liquidity. I don't care if people don't believe me or not. It doesn't really matter to me. I know what I'm saying because I'm the one doing like the math and junk, but I'm thinking about valuation and like what would that have done? It's basically like going all the way back up. And you can see it visually on the chart. I mean, it's right there. So again, that's a 2636. Instead of doing 2.2636, which is 226.36%, I'm doing 0.2636, which is 26% of the value. So instead of doing the bigger multiple, I'm doing the smaller division, if you will. This also might make more sense of other things that were said that I don't really want to get into too much. But one thing that comes up, again, it has to do with that 1069 level. One other thing that comes up is the $9 mark as well. And this is where things get kind of spicy because I'd previously not really given too much thought to the middle here other than like, oh, it's just the middle between these two markers. And it's like 891. And lately I've been getting like 885 and 890s quite a bit. And I'm like, I gotta remember doing that measurement from way back here, thinking that it was gonna hit 8 something. But like, other than that, like there wasn't much else there. I wouldn't have picked it out, you know. So I'm looking at this overall, and I'm like, what do you make of this? Is this even useful? And I'm not sure yet about this shift value. But what I do know is that the, what's curious to me, anyways, is that the you can see the top of this valuation is $1.06, which is really fascinating. You guys are like, why? Because $1.06 was the place, if you drop down, like as the crow flies, into some of these calculations, that you basically run into $1.06, not $1, which I thought was weird. The gap on this one is also right where you are in liquidity in terms of filling. I don't want to go like too crazy on it, but I thought that was pretty interesting. So back to the other chart, and I definitely need to talk about on balance volume before we sign off today because it's super important. So hopefully I'll get there. I think I'm almost done with this. So back on this other chart, this really wasn't giving me very much information. So I went to, and I was like, it's a different line. It's slightly different. You can tell the angle's different. It doesn't quite match up. I was like, it makes sense here for what I was doing. But then I'm like, how do you use this, right? I don't know. All it would suggest is maybe these kind of alley-oop levels where it's just like hop, hop. Maybe you can kind of double up and find those values. I'm not really sure. Gives me a certain path to 1, I suppose, if I want to use 1, and it goes from 1 to 540. But I see it as more like a variation. And when I started doing these, I went back and I copied and pasted them. And it's the same markers. And this really kind of was like, oh. So so at this point, I'm thinking like maybe it doesn't matter that much. I'd already done the variation. So I know some of these numbers here that are going to like 10s and stuff like that and 8s. I'm like, kind of a weird number to get. Like everything sub 10 is kind of low. And I'm thinking to myself, is that really as far as it's going to go? Well, I've been thinking for a while it may only go to 6 something, and anything above 520 is good. I've seen plenty of charts of my own and other people's that go higher, and I've been looking at other possibilities like hitting 1250 and then coming back down and all this other junk. But like really anything above that gap that we made in December is pretty darn good. I mean, that would be considered a win. And it would go further than that potentially by maybe by twofold. So like another 100% on top of that, of whatever that previous value move was. But that's a big, maybe, So I'm looking at this thinking that there might be something here. So I went back and looked at the original markup, and lo and behold, the gap value, which was on April, actually intersects where that exit is with those trends. And you may think, well, that could be coincidence, I suppose. Yeah, it could be. And I'm not here to tell you it is or it isn't. I don't really care, because what I'm trying to do is just trying to take something and look at what I have and seeing if it makes sense. Well, I'll tell you right now, it does not make sense here. Because here it would indicate that you would basically be hitting like a potential high in March. If you were to use the same exact variable, you would hit a high in March, right? But then there's another curiosity here, and I'm like, well, that was opposite. We were dropping down into early April, and that's closer to like the pivot, right? So that doesn't make any sense. But then there's another problem here, which is that you can see when we came down in April 2025. When this comes down on this particular set of parallels, it actually hits the bottom, and it hits it twice, and it's anchored on that gap. I mean, that gap basically predicts with these parallels where those bottoms are going to be, and it does. And we talked about that a minute ago, and it's a breakout moment, and so on and so forth. All of this triangulates like super neatly, but we don't have the same angle here. This is not as steep. If you look at the bottom to the bottom, it's nowhere even close. Even just looking at like the gap to where that bottom is, we can visually tell that's not right. Like it can't be right. It's the wrong, it's just not there. So either this is a bad comparison, which is fine. You could say, yeah, it's bad. Just let it go. Or you could try it again with a lesser angle, because this is technically lesser. I've talked about this in the past. I do think that this angle on the whole is weaker than this angle. If you look at the severity of that rise, this is very on point with it. This is very much steeper than it. So I've talked about that before. I was like, well, in the past, I've kind of seen this angle as lower anyways. So maybe this really isn't that big of a deal, because maybe the angle's just lower, like that simple. So what I did is I found a new set of variables, and I went through the process of just kind of looking at it, thinking, again, as simply and yet critically as I can, because I know you can get really complicated, and people will say your chart looks stupid or whatever when it's super complicated. You don't need to be doing that. I know. But what I wanted to do was I wanted to take that same concept and apply it in a localized way and not use the previous range at all. So I didn't really include the previous range at all, though some of these lines do go there. Curiously, the top one does. But I used a different set of criteria to define where this marker was in terms of like the angles and whatnot. And again, 545 came up as a middle, 539 came up right here as a middle, which I thought was pretty important. And then also, we have the gap and some other various points of interest that have indeed induced some sell-offs and so on and so forth, and or gaps in the middle, yada yada yada. So then you go to this place where it's like, well, what are you trying to accomplish here? Before you go any further, because I'm already kind of lost, you're talking a lot, I don't really get where this is going. Well, my goal was really to see if this could have triangulated that variable. That's really what I'm trying to do. Like, I'm not just doing things just to do them. Like, it may seem like that sometimes when I talk about crap. I'm really not. I'm not just doing them just to do them. I know that sometimes, I might be bored and things get a little carried away. But I'm specifically looking to see if, like, let's just say the algorithm as it is, the composite operators that are working it, are they generating these markers early on? And I think they are. I don't think it's evidenced in long term, in retrospect. Are they generating them early on? And then can you identify where those markers are? And then also be able to identify how those angles would interact with those markers. So this is more or less like what I concluded. Now this is kind of weird at first glance, and I don't want to get like too crazy detailed about it. It's a bit bizarre way to look at it, but essentially it starts with this April bottom. And if you look at the April bottom to the top, and then going back to where the breakout is as a center point, and then using the top and then the hook value where it drops, and you start that huge thing. And then in addition to that, you can see the other interactions here. This is actually a really strong kind of center motion here to the whole thing. All right, so then all you have to do is draw the S-curve, right? And you're going to get the answer to exactly where it's going to go at exactly the right time. Well, that's not quite how it works, because in order for that to be true, you'd have to measure it out and know exactly where the middle is and which one of these is the middle, right? Is it where it enters? Is it where it exits? This is pretty dang close, this January 2025, to the other middle that I've been using, which was February 7th. It's really, really, really close to that one. So it's not like way, way off, right? But also, you'd have to kind of know, like, again, where are you going? Like, what's the point of this? It needed to kind of have a target in mind in order to really, truly triangulate it. Because I could get the angle, but if the angle, in order for me to kind of have a stopping point, I need to know where the price is. So, like, if I don't have a stopping point, this means nothing. This could just go on indefinitely. You have to have both a stopping point and an angle in order to have a calculation for time. And so that's the important thing. So why did you pick 891? Well, this is curious because, again, I was measuring it out, and I was doing it like a bunch of different ways. And then I was thinking about, again, that shift down, and I was like, if that really is true, then November to November would make the most sense. November 17th and November 17th would make the most sense. But in the process of doing this, I don't know if you guys remember, but I had that other set of parallels going down, and that's really important. Like, I didn't want to just leave those out of the equation, so I brought them back in, and I specifically went to the peak here, right, which goes back through very, very closely, goes back through the September 5th, and also where we wrapped around in May 2021. So again, pretty much the same parallel structure as before, but I'm moving it, again, a little bit more in favor of the other one. I showed you guys two. And then in this case, I went to the gap here. I think the gap in May is probably the most significant point of interest, so that's what I'm using. Again, very, very close to this creek cross at its steepest. It probably does exist, right? If you put this down a little bit, it probably does exist. And it probably checked it maybe in earlier in May as opposed to, earlier in April as opposed to in May. But I'm looking at this thinking, okay, well, like, where is the top then? And I went back and I looked at specifically where that Judge Zern thing happened, because that to me is also like the more pivotal moment in the stocks transitioning from like what it once was to what it is now. And ultimately, like, we know that level of that level matches or one or the other, in my opinion. And I'm not going to, again, go through that proof right now, but I think it matches here or it matches here. So I'm like, it should be pretty important, as far as all this goes. And I went through the process of just kind of measuring it out and seeing where that parallel structure might be, where that goes back to. And it's kind of curious. It goes back to the center mark here. And I find that to be curious because I guess for me, I've not used these established waves in other ways like this, where the center, aside from calling it what I call it, which is just a cross, where the center is somehow important long term. But it seemed to be very important here because the center of the breakdown here that happened in 2021 is indeed where we kick off of later. And I had made that argument recently. I was talking about like how if you use those markers, we're kind of wrapping around them now, the June and July markers. That could be a place we kick off from. I think it's important. I'll just leave it at that. So anywho, you might be saying this is a little bit arbitrary, right? Well, yes and no. Again, I'm using data that I typically has had success with, not the data that I feel like is kind of meh. I don't know. And so this is just the iteration. That's all that is. I just copied it. I did the same exact thing I did here, but with the iteration. And maybe not surprisingly, I suppose, when it came to the conclusion of all this, and this is really the bottom line. I've been saying the number for the last 30 minutes. The bottom line was like 891 kept coming back up. And again, I don't really have a great explanation for that because in reality, I'm like, well, shouldn't it be like $7 because isn't that where it really broke down? There is a backup that goes as high as $7.50. And that's a curious one as well. I think it's a possibility. But again, if you use that shift, this actually makes sense as more or less like the bottom. So if you use the second shift, not the first, it represents this level up here approximately. Okay, which we've just talked about, like long term is a very, 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 very important liquidity level, right? That you would want to come back and check. Now, the funny, I guess the funny thing is, or maybe the weird thing is you might be saying like, well, why not higher? Why not go way higher? Like you talked about 19 something. Well, I don't think anyone would disagree with me saying that, look, if we go to 19 something, we're breaking out because if you go above, we have broken out, right, of this range for sure. But you're also like way back into the original range at that point, which now looks like 11 to 34, right? So you'd be in a new area, brand new. You'd also, I think there's not really a way to draw this creek. And I know I've got it kind of offset right now, but like there's no way to draw this where 19 doesn't break out. There just isn't. In fact, it almost doesn't make sense to go there in one go. And I've talked about that before because I've said I don't really get why we would do it in one go when you could do it in two. And I was looking at this guy, which I'm marking off. And I was looking at this guy saying, well, this makes more sense. If we're going to jump any creek, we got to get this one first, which is the two peaks here, August to August. It's like, I don't know why you would look for anything else to start. And even now, and I'm doing it at the top there, if you go through that gap fill, you can see like we're really, really, really close. I've been telling everybody every other day, like I genuinely feel like it's there. Like we're a stone's throw away from a really big break here. And I mean, if you look at that, that is extremely close. You just have to get over 320, which is the number that they got over here in May. And it's also the number that we stopped at when we pushed up. We went to like 318, 319. If you go over that marker now, you're over like every creek that we have. Like it's just right there. It's so close. That is ridiculously close. Now we're moving away from it right now. And this is kind of the big fear, if you will, which is that if we end up with a really big sell-off and it kind of just sticks, there's really no telling how long it takes, but I would suggest that, sure, January seems likely, maybe February. February was kind of the end-all date anyways that I had for a lot of this. That is possible if it comes down low. I'm not going to sugarcoat it. There's definitely a possibility. I've shown a chart that goes down and chops in this area around twos. I don't want anyone to think that could not happen. I genuinely believe that's a real possibility because I don't know what the operator is planning on doing exactly. But what I can say is that using the parallel structures that we do have, I would suggest to you that the maximum here that makes the most sense is really going back to July, right before the split. I don't think there's much else that makes a lot of sense. And I used some triangulation to determine where do those intersects happen. And I found, I kid you not, and I know this is going to seem like I did it backwards, but I found approximately November 13th. The reason that matters is recently on GME, I had done something kind of similar, and there was a few dates that popped out. One was, of course, January, which is, you know, what you see on the chart here. But I had another area right here at the end of November on the 28th. And between now and then, there seemed to be a pivot around that date, around the 13th. Now, this does not mean that it's at a high there. But what I did do is I went back and I looked, and I was like, I wonder when this broke down. And you can see it on the chart if it's a 2-year motion. And I know this is going to irritate people, because it seems like I know exactly what it sounds like. I know, but I already made a case for it. I promised that I would, and I tried to, and I genuinely think that it's that variable, I just don't know. There's two dates here. One is November 9th, again, which is right around where that earnings was, which we dumped at, by the way. That was where that offering was. The other is November 16th. Those two markers would be the two dates where this broke down through those levels. And I find that to be extremely odd that the intersection is the same date. Now, I would not go so far as to say that that means it has to be at 891 on that day. I've done enough of that crap to know that it doesn't typically work out that well. But what I did want to do was see if, all right, if there's some kind of a wave there, right? Let's say, for example, this is a low pivot. So let's say it's the opposite, and it actually goes to the bottom on November 13th, which does happen, right? Sometimes these pivots are like inversions. I find them and I'm like, wow, it was like exactly the opposite. And it often is the case, because I think what you're getting, again, is kind of like this rotational motion around it. But I'm not going to get into that further right now. Point is, I just did the measurements. I was like, where's the middle? The middle was on November 12th, which makes sense. That was another earnings period back here, and it is where we crossed through this creek. I haven't done this yet, but I am curious, right? So let's do it. If we go from, well, I'm not really sure where to use it, but like I'm going to try, let's just slap it. Let's just slap it down. Let's just slap it through there, right? Why not? If we go to November and we go to approximately those same dates over that 2-year period of time, they are in line. This tells me, I mean, obviously you guys are like, well, yeah, because if they're riding that parallel, wouldn't they be like, you know, pretty much? But no, they don't have to be. I mean, they could have been anywhere. They didn't have to be like right back in this kind of centrifuge of motion. That's not a requirement here for these parallel structures or whatever to work. They're basically at the same exact spot, November to November. And I think that that's really important. In addition to that, I think that that creek, what that could mean, and again, you guys are probably going to be like, well, I don't know if that really matters that much. But listen, what it could mean is that the 891 is indeed like a top value. And I had used it only because of, again, like looking at that other chart, like it kind of matched where that gap was. I was like, well, maybe, or where that bottom was. I was like, maybe that gap was filled here, which would really stink, because it does mean that really there's no pressure at all. The operators already went back and retraced at 1330 to that big gap in Judge Zern decision that theoretically, right, we made. There's another, I guess, section here that's still a gap. I'm not going to say it's not. There's lots of liquidity gaps here. It doesn't also mean that it doesn't ever mark up or it couldn't go back up there. That is a silly conclusion. I would not say that. It just means that like that could have already been checkboxed, in which case The only backup that we're really missing, if you look at the chart visually, would be this backup to like this area right here at 770 up to 891. And it actually kind of makes sense because, again, long term, I'm looking at this like, oh, there's a lot going on right here in this pocket, and long term there's a lot of, let me just say, there's a lot of intersection right here, and I already knew that, and we had already seen it in other charts. I'm not saying it's anything new, but again, we've seen it before. So when I use the middle here, this is also quite curious. You'll like this, I suppose. It would make sense if you did this the way that I did it. If you go from November to November and you use the trajectory down, you guys are like, well, that's not even close to where it's supposed to be, right? I know. But listen, if you go from November to November and you use the trajectory down from that breakdown in November 9th, right after earnings, to the bottom here, and that's what I did. I anchored it basically in those parts. It does look like a pretty convincing trend. It goes back to the opening value here on the 24th. It's a nice like cross trend. I wouldn't put it much further than that, but that's where it is. It does seem to anchor itself quite neatly again on 891 and the bottom. And then I went to the bottom. I flipped the marker from here up. It does follow, which is curious. It didn't have to. Not saying it definitely means it's going to go up there, but it does follow quite neatly that second rise that we had here almost perfectly. Almost. So what? We're going to go up on that marker? Typically what I'm looking for is, again, that spring motion. If you get the double top here and you have a big push down, if you get a double bottom here, you may have a big push up, and it could be quite significantly huge if it's like a spring, right? I look at this and I'm like, it doesn't have to mean anything per se. If I'm wrong about the 891, it won't matter that much. But I also want to point out that there's a couple other things going on here that are really significant. And like one of them is this kind of layer cake right here. If I flip the chart, if you look back at this and you look at this as like a breakout, we've been doing this for a while. And you can go back and you can look at 2021 or whatever you want to look at. If you look at this as a creek cross here, there's a lot that's kind of left open. And especially on like GME, there's a lot that's left open in this middle cross. And it just didn't do it. It doesn't mean you couldn't come up here and hit a high, right? And again, looking at this, you might say, well, technically, like if it's going to get back to where it was, shouldn't this be at $2.17 or $2.12 or something in the next couple weeks? Yeah, maybe. And I actually, I didn't even have this there. I just had it. I just put it there. But this thing was already on the chart because I was looking at it like, well, it may need to come back and hit that mark, and then it takes off. Again, that's like going back to that $2.17 area, $2.13 area, something like that. And I had just announced those numbers earlier in the stream, like what I'm looking at. This would, in theory, make perfect sense. And I know it may not make sense to everybody who looks at it, but to me, I'm like, at the very least, you should be coming back to like 7 because, again, this area was largely not traded at all. There's not really much going on here at all. It interacts with the creek cross in that it just didn't check it. There is a marker cross up right here that occurred at $4. We did come back to $4. That more typically does represent like a midpoint. If you look at 2020, that pop in the middle, not the big one, but the one that's in between the two lows, that pop is like a 50% marker to the anticipated zone. If you do that from here to where we just marked off, it goes to the lower end of the 739 if it goes through $4. That's very, very, very close. So that means that there's actually a pretty small window here. Like, I know it's a little bit of assumption because you have to say, well, where does the actual low hit, right? Where does the actual low hit? And when does it hit kind of thing is important. But like, what I mean by that is like, you could say, well, if the low hits at 213, then that is correct, Booksy. But if the low hits and it's 178, then isn't it going to go like way further or something? Well, I mean, yeah, if you're just doing the one measurement, sure. Like in theory, yeah, it should, right? You can do that and you find that the 891 works. So these two numbers that I marked off, they're variables of like two bottoms. One's at like 213, one's at like 178. The 178 is the very price that they were given in that offering, and that was back here in like July of this year. They were given it for a really low price. So it would not surprise me if they took it all the way down there to the 178. 180 has been on the chart for a while. But that said, I don't necessarily think that has to happen. So I'm not going to like say, yeah, it's definitely going to happen, right? The other thing here is timing, because this is nice and all if it's exactly a 2-year cycle, then it kind of works, right? November to November. And certainly this is giving me a lot of interesting conversation points because, you know, in looking at this, every November is kind of lined up, which is curious. That does seem to be riding a certain trend year over year over the course of 1-2 years. But then it's not resetting, right? It's actually lower than anticipated. I don't know if that matters that much, and I haven't really gotten to that as a conclusion yet, that it definitely will or won't matter. But what I would say is that, yeah, I mean, it certainly is important. I don't know everything in the world. I cannot mind read. I cannot predict every little thing. But the fact of the matter is that I didn't come about this by looking at November, and then November again, and then the fact that it matches the criteria for this setup doesn't faze me, but it's also not like, it really isn't a self-fulfilling prophecy, because it's like I didn't go at it with the conclusion in mind. I just kind of went at it with like, well, I mean, kind of had the conclusion in mind of 891, but I also knew that, hey, $1 is possible. 1 to 5 is the same range. So 1 to 530. So, I mean, like, in my brain, I just know that, like, normally if you get that cross down and there is a wave back up, that is what I'd be looking for. It's this intersection. So, like, this may seem a bit odd to most, but I also feel like this isn't, I know this. It's really no different than what I've been talking about for a long time now. Because that silly structure that we have, and it is obnoxious, I think, to talk about this structure all the time, but that structure that we have is so very important because it's really the only kind of, if I had to pick like a piece of evidence, it's like the only real piece of evidence that gives anything meaning here beyond just liquidity travel. I mean, in terms of patterns, like that's the only pattern I think matters. So this would normally be what I would be looking at, and a variation of those directions, sure. Like, is it here to the low or here to the high and yada, yada, yada. But these points of interest would be where I'm looking. And specifically, lately been looking at this area as low, right? And I've been doing stuff like down here, just trying it out and seeing where that goes, in these variations. And like, does this mean that we're not going very high and blah, 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 blah? You might just say, well, just pick one, Yes, I agree. You probably should just pick one. But at the very least, this would tell me, or at least somewhat inform me on what my expectations would be for a spring as well. Because I don't know if you can blur your eyes and see it. There's so much noise on this chart now. I added too much. But like, the drop here actually matches. So this is where I suppose where things can really become quite interesting. We had talked about this a little bit before, but the drop does actually match up with the hit to the upside in a fairly precise way. So the measure from when it went through the bottom, right, this white zone, which is where the gap is, up through the top. And it depends on how you do it, if you use extended hours or not. It was pretty close. Normally, if this were defining a range, right, if this were defining like a trend down, you had a sell down on the bottom and then you push up, your sweep to the top would be roughly the same. And it also gives evidence as to why that would be. It's like you're loading up on the slingshot down here, you're pulling it back, and then you push up. So the idea of this kind of exiting here at like 350, going down to 339, and then pushing above the top of the range and then coming back through totally makes sense to me. And then that target, of course, notwithstanding, is also very important. So likewise, I suppose, there could be a similar drive here, up and down in terms of like how far this needs to go. And I'm not sold on the idea just yet that this is necessarily what we need to see, like some kind of massive dump. But what I would say is pretty much everything that we've been doing lately has been underneath where that drop in happened, which is accumulating quite low. And I mentioned that in 2021, that same idea happened. Like it spent a lot more time in the bottom when it came down, and it was really like below where the liquidity range kind of would have been, like the shelf. That's debatable, I suppose. Some people would be like, no, dude, it's just wherever the low was. But the way I had measured it, I was like, strange how it sort of barely hits the top, but it kind of plunges and goes through the top a little bit here and there, but then like plunges through the bottom, right? So in theory, okay, if I were just doing this as a matter of like simplicity, I suppose, what I would probably suggest, in just keeping with the rhythm here, is that you don't have to like have everything. You really only have to have like a couple marks anyways. I mentioned before that like the big macro creek, it's really right above us at like 320. So that one is super, super, super important. I probably wouldn't worry too much about other markers here, this other parallel trend. I don't think it's that important. I think I'm using it because it's me and I like to use stuff, and I would use it. I would look at this trend. I would look at the 891. I would just keep it on the chart. I'm not saying it has to be right, but I would just keep it on the chart. And I would use this guy and this guy. If I have to pick others, I could, but those are the ones I'd probably use the most. Anyways. They're kind of weird, aren't they? They don't really look like they necessarily make the most sense, but that's where they are. And yeah, and again, this should go through the gap, I believe. But I don't know how I drew it. Hang on. Let me make sure that's right. Doesn't look right. There was a reason I did it where I did it, but it has to do with the measure of the middle. So it doesn't necessarily look like it connects, but it should connect there. It's like hits off the bottom. That's pretty much the correct angle. Now, from that point, you could estimate a whole slew of other things. You could use these kind of mechanics. I mean, that's going right towards it. You say whatever you want to say about that. There's other things that kind of move towards it. This guy, I believe, also it's kind of swinging out towards it. There's a lot of interesting momentum into that point. I would just call it a pivot for now. I wouldn't necessarily call it a target, price target for sure, because it's very possible that could end up being like an actual low. And you guys are like, well, that's no, it's like right there. Hey, we moved like 300% in like 2 days. Okay, it's not impossible. It happens. But what I'm suggesting to you is that is a very important date. I'm not saying it's the most important thing in the world, but I wouldn't be surprised if we're on an absolute low on the 13th, or we're way up high on the 13th, which is coming up really soon. My expectations for earnings is probably, if I had to pick one thing, it'd probably be like a pump and dump to come back up to like 265 or 270 and then dump. But that's purely just guessing because I don't know, right? The only thing I would say about a breakout, again, is it has to come above this 318 marker, like 316 to 320. It has to hold that area right here. And I've had my markers set up on 3 for a while. And then also on 280, I'm looking for early indications of movement. It might be a little bit slow though. So if it does drop, who cares? I don't care how low it goes. Let's say it drops to 229 and then it comes back up. You would look for possible supports at 246 and also at 267. So like if it hits that at a low, again, I don't care where it is. You would look for supports at just above 246, and then again right here like an M cross above like the 267 mark. That's really what you'd want to see in like a build out here going out. This would look really bullish, and then it would have to continue, of course, once it breaks here and goes to the upside. Longer term, and I got rid of that marker on here, but longer term, I think you kind of have to take this with a grain of salt, but I can't find, and I mentioned this before, I can't find a really good window past October, and I've said it a million times, we're already past October, but I was like, if we don't go in October around this time, like I'm not sure when we're going to go, but it would look like it could wait till January, and that's what I've been finding. There are plenty of dates near December 10th, which makes sense. That's when the AMC vote comes on. Lots of interesting little pivots and stuff there. We're already doing a little pump here. 258 is another important level. That's the May 5th bottom. That's another one to watch. It's also pretty significant. Support there could be a really good sign. 258. I forgot about that one. I would just say, common sense here is going to rule. This is the simplest possible way to look at this. It's just a creek jump. Once it gets above this level, if it can hold above this level without distributing around 330, 320, very similar to what we saw in May of 2024. I do think that it's very likely that we're going to head up towards 520, which is where the gap zone is. I think that in and of itself, that 520 that they marked off, I would see it as kind of a middle. I don't know if there's a better way to put that, but I would kind of see that as the I would say the spiritual middle. I would say that's probably the middle. Okay? And more than likely, you guys are like, it's flying, man. More than likely, it's going to intersect with the $4 middle here in some way. So I'm just literally just throwing that on the chart right now, and you can see it looks like it's supposed to be in the right place. I'm not saying that willy-nilly, but this should have been marked off the middle somehow. If it's not the actual middle, the $4 mark, this should have marked off some kind of an angular middle. Right now, it looks like it's kind of intersecting the 520 area around the 19th. So again, if the absolute low were on like the 13th, potential there is that this could go up to the 520 mark, which is the gap fill right here, which is on the 25th. Likely also could be a pivot, so just be careful. That's not really a big window. It's like 1 week, and that's as far as I want to take that. I'm not going to call out where I think the bottom absolutely will be. I don't think that's wise. But these are kind of like the main markers. I think this is the key, right, in terms of the breakout. And I personally think this area right here, it really should just represent like a mid zone. From about 485 to 520 really should be like that absolute middle. So I can't guarantee where that bottom's going to be, but somewhere in the midst of that, right? And then there's also extensions that I did not talk about. I deleted them a minute ago. I will add those back on, and then I'm going to leave it at that. So these guys, I'll make them blue this time. So they were red on the other chart. These are just extensions of like supply. So these are places that supply has previously like dropped. So they took off from here at 5 something. This to me just represents like possibility of like extension and or consolidation right here. I don't see it as anything particularly more than that. Just it is what it is. So all that zone right there is up for grabs, I suppose. There were extensions on the top too. Remember, like this goes high. This kind of stuff happens all the time. So like just because it pushes up, this one is kind of like the key one, I think, for this area right here. You see how it drops through that Judge Zern area. Just because it pushes up beyond it doesn't mean it's going to stick. So I wouldn't really care if it goes up to like 10 something or 12 something or makes a new high. It doesn't make any difference to me right now. That's kind of the area I would still say 891 is kind of the area I'd be looking for it to really be confident, I suppose. And then with a target, and I honestly, like I said, anything above 5 to me, which is where that you can see the high liquidity marker right there. That is exactly where it is at the 520 mark. Anything above that is really positive. If this were going to kind of hold on to itself and move forward, it would need to consolidate in the 6 to 7 area over time. I'm doubtful of that because of what's going on in December. I don't know what's going to happen with a December thing. This is also assuming that it actually goes up now. And the alternative here is like a dump. Like it pumps here, goes high, reverses, and goes low. And then it doesn't actually break out till like way over here in like January or something, right? And that's not even close to beyond the scope. I mean, it's definitely possible. So just keep in mind, like there's a number of different things that can happen after earnings. Do not be deceived just because it goes up. You have to make sure you get that hold. I'd feel a little more comfortable if we didn't go higher than 265, which is kind of where it is now. That's kind of what I was saying, like pump up here and then pull back. I'd be a lot more comfortable if we came down first to like 226 and then moved, as opposed to up first without any other consolidation would kind of be suspect. I don't like that. I'd rather see the move start low and then move up at some point in the near future. So this is where you'd have to be in terms of a breakout. And again, you don't have to take my word for it. These are where I think the creeks are, but you can go back and just do a simple downward motion from August through, where that, I keep saying Judge Zern, like he's like infamy, or like this judge is living in infamy, now, but like that is important, right? That would be a major creek. So you can see that this is where it needs to go. I mean, there's just no getting around it. You got to get up and over this zone right here. I like that it's where it is. I like that this makes sense, but I would just be really cautious about anybody who thinks that it has to go now. Even in the midst of this, you're like, well, you just said this is like a pivot on the 13th. Yeah, and if it's a pivot low, that just means that could be really the absolute bottom, like the final sell-off. And I'm going to add some fuel to the fire here because I talked about this a long time ago, but I talked about coming down to on the on-balance volume, and you can see a little glimpse of it on this chart. I want to look at it over here. I talked about coming down, and hopefully I still have it. It's kind of stink if I didn't. Maybe I don't. I talked about it coming down for a long time. Long time. And I posted about it in April of this year on the Discord group, and I had drawn it out, so I thought it was going to come down by August. But I imagined it would be like a, you call it like a caddy or like a foretop, right? It took a really long time. It looks a little more like a head and shoulder than a foretop normally would. Took a really long time, but it came down. It's dropped significantly. So this is a really big deal. Like it finally dropped. To put this into context, this is what I imagine. And again, you can kind of take what you want from this. If you think this is wrong, go do it yourself. I'm not here to spoon feed you everything and you just take it no matter what. If you don't think this is right, that's fine. Like go do it for yourself, check it out. But what I'm measuring here is what I think is the walk down pattern, and it is hitting the same markers in terms of this breakdown and all that jazz. This is essentially the distance traveled on the first move and then the second move. Before you get a little bit like lost in that, in the weeds, I urge you to go look at, do the same thing, but do it with 2021. And take a look at that motion right here in 2021 and compare it to what I was showing you in 2000 and right there. And then compare that with what I just showed you in 2020. I guess it's 2023 on to now. This area right here, I don't know if you guys recall, we were just talking about that earlier in the stream. This is the beginnings, right, of that drop down. This is the full 2-year cycle. So it starts here in May 2019, it drops, comes back, breaks out in May 2021, almost the exact same date. It's really, really, really close. And it builds out a bottom here before that happens. And I'm going to have to, let me see if I can get this to, I shouldn't keep double clicking it because that auto scales it. I don't want to do that. Sorry. So you might be thinking like, well, they're not the same, you know. They're not going to be the same thing. There's differences. They're not exactly the same. You're right. But they're very, very similar. And if you go back and you look at that walk down pattern that occurred, it's essentially perfect. Like you can see the up thrust above it and then below it. That is roughly the same angle as well. And they had established this early on. Look at the sell-off that happened as they're going up. So price is moving up, on balance is coming down, right? It's moving the opposite way. That direction, it basically informs where the end is going to be at the end of this pattern move. So take that with your consideration if you want to do that comparison, and then you look back at this one. It's like really dang close. What's missing? Well, possibly a couple things. This is indeed coming down while the price is coming down, so it's a little different. There's also not much of a rise. It never breaks above. This stays really flat. So that's a tricky thing because it doesn't ever go back above. It doesn't have like continuous higher highs. There's certainly some discrepancies there. In terms of like starting position, what this implies is that you probably are going to go back to the original starting position really soon. In fact, this is marked off as December 13th, and you can see like that intersection down. It's not necessarily the best, but I used this one, and I use these little lips right here. It's really hard to tell. It really looks like the same time, though. It really does. It looks like it's ready to either do a reversal here or to drop through that ledge finally. And I wouldn't put it past them to kind of like do a little pump and then dump here and really drive that price down. That's the same thing that happened in 2021. The price was driven really low in that case. Well, what about all this other stuff? What about like all this crazy stuff here? Does that mean it's going to dump way down here? I don't know. If you use, I just don't know. Because if you use this and you do the comparison, you'll see that the sideways won't really match up because this doesn't have the same inclination and widening that the other one does. I would say, yeah, this still looks right to me, you know. It also looks like even if that were the case and it broke out here, there could still be like another move that needs to happen going into January. Right? It's not impossible. So it doesn't mean it has to go up immediately after either. That would be a bad conclusion. And then I would also caution because of this, what I had done in 2021 was I looked at where it dropped, and it does come back to that place again. It does come back to where it dropped off. And in our case, that would be right here, in theory, if we're using the 891. And that's pretty much where we are right now. We're right above it. Slightly below there, maybe. Oh, down to 24. So you could you can kind of fudge it. You could say somewhere in this range. It's not really helpful. It's a big range. But you could say, man, maybe it goes somewhere in that range. In which case, that would be, in my opinion, a spring. It's a sweep. They're pushing out of this trend. Definitely. And I think if it did that in reverse, you'd be fine. Remember, it does the same thing in 2021. It went over the top and then it goes back, goes over the top, and then it comes all the way back down through the bottom. I just showed you that chart a few seconds ago. And so that reversal right here would make sense. Timing doesn't really tell you much else. You can look at this and assume certain things, but until you actually see it, it's just assumption. On balance, volume is not really supposed to be charted this way. It's supposed to be a directional thing. But for whatever reason, operators are using it, so I'm using it. I had been using the February 6th as the middle. You can see that that's clearly different. But if the February 6th is the middle, then this also implies the same thing. You can see like from the bottom, and I kind of did it from the gap. But you can see right there, that middle, it looks pretty good. That does intersect the top here around November. So like from a wave analytics point of view, that should be either a pivot, right? Well, that would be my biggest guess would be it's probably a pivot, or it would have been a high, depending on how you're measuring it. So I think it's right where it's supposed to be. I will say that when I did this earlier today, I came up with October a lot again. And I know that doesn't mean anything to anybody, but I genuinely do think that there's kind of it was like a window, and I think we just didn't get it, you know? I'm not going to blame GameStop, but I kind of blame GameStop in my head because I'm thinking about like what were the implications of making that October 3rd to the 30th warrant thing. I don't know. Maybe nothing, but it's hard for me to dismiss it because there's still a huge amount of like time-based evidence here, even like in the new middle that we got. Like if you measure it out from the bottom through the new middle, it shows like October 24th. It does not show November something. The only thing that shows November something is like these, the trajectories and the intersection of that, the macro kind of channel wave here, I guess if you want to call it that. That would show that you somehow return back up here. But again, it's like more of a pivot, November pivot. So we'll see. The other dates, and I'm not bitter about it. I'm just like telling you, like I kept finding the same dates. So if you hear a bitterness in my voice, it's more of like, yeah, I don't know. I don't think in my human ability, like could have measured it differently because I still keep finding the late October to early October dates, and that's already come and gone. So yeah, see like this right here would have been easy enough to do. October 28th, that goes through the middle. The widest one right here through that middle area would be where it drops off on like the 24th, which we talked about previously on GME, because GME has one at the 24th that looks quite nice. That pushes you out into November 28th or 21st. So sort of like the third week of the month type deal. OPEC stuff. So anyways, I would not look for the moon right this second. My anticipation is this should send us into a good spring. If we get the moon, great, but at least then I'm surprised and happy about it. And if we don't, then I'm not surprised. I would look at the 13th through like maybe the 18th as maybe like a low pivot. And then if nothing happens, like we just kind of settle in, I'm going to go ahead and say that it's more likely in my mind, it's more likely it's going to take all the way through January and be pretty similar to the 2021 timing of things. Like they're going to wait till the last second to do the whole move. And that is a little bit biased, I'm not going to lie, because for years now I've been talking about February 2026. I still don't find that as unlikely, by the way, that February is where we're by February, not at February, but by that time we've made our move into the motions. And I know that is biased because I think at the end of the day, it's like, that's just the number I picked. And it's also the one that I keep going back to. So I kind of favor it when I see it. And I'm like, yeah, this is really close. Oh, it's March, or oh, it's January. Okay, well, that looks like the February setup to me. Um, so yeah, the other element that I didn't put back on the chart, tried to make it simpler, was this guy, which was and there's a number of ways to do the in and out trajectories, and it actually is a steeper trajectory if you use the November date. It's a steeper trajectory. It goes 67 degrees here instead of like 63 or something. The 67-degree trajectory, it might be tempting for you if you do this kind of stuff to just make it go straight up and say, well, it's already done it, it's done. Yes, the auto reaction is done, but a big wave, and that is a pretty accurate auto reaction, but a big wave is often still going to have the same intro and outro trajectory. So if it spends a long time in the bottom, so be it, right? The idea here is that at some point, you're going to play catch up. So again, we can go with like the maximum February right here, 2026, and say like that's really where the wave is. Well, at some point, if you're going to complete that, you're going to come back up. It's not necessarily going to look pretty, but certainly you would eventually come back towards that motion, and the trajectory out would then look fairly similar. So I had already kind of moved this around a little bit, and I think I picked one that isn't the same. You guys are like, it's the same trajectory. This is different. This is a completely different line. This one does intersect that November 13th area quite a bit. It was this one. This is the one that goes all the way back towards the middle. If this is the middle, then it puts it out in like May or something ridiculous. And it also would have to have so much other stuff happen. I'm not interested in doing that right now. I'm not going to do that. So that's it. So much bitter. I don't mean to be bitter about it. I'm just kind of done with it. I'm ready to move on with life. So, I mean, I know other people are going to say, well, you can just leave. You don't have to like be here. But like, I felt committed to it. I wanted to see it through, and so I've done the best I can. As many people will point out, I've not always been very accurate at times, but there are also times that I've been pretty dang spot on, So I think it just depends on maybe the things of the world, what's going on in the global economy. I think has made a big dent in the charts, what we've seen. We didn't really get, and maybe we're finally getting some of that now, but we didn't really get a disbursement, did we? It's weird because smart money apparently was like largely exiting some of those bigger plays, and now I think they're just kind of pumping on weakness, like your big tech plays. And I don't think they're going to last, but I also haven't seen them really buy in either, because the rest of the market, if you look at the S&P 500, even, and those are large caps, right? If you look at the S&P 500 and you do the one that's like equally weighted, or just subtracting the Mag 7, they're not doing great. Like they're pretty flat. Like if you compare it over time, it doesn't look awesome. So it really is sector to sector. Some sectors look great. They look like they've made tons of money. And other sectors, they just look horrible. Like they've not recovered. And I don't think small caps in and of themselves look horrible. Again, like the Russell 2000 obviously had a recovery. But a lot of your small cap stocks like didn't really get that injection of volume in the last 13 to 14 months. They just haven't gotten any attention. So I don't know what to make of that exactly, but that was one of the things that, for me anyways, I'm like, yeah, I think that needs to happen. And it happened in 2021 when the Russell 2000 and the S&P 500, they were already running, but the Russell 2000 actually peaked super early, and then AMC and GME followed later in the meme stock craze. But the same thing kind of happened here in May. They were at a place where they were already up into an SOS consolidating. They were already high in the range, and then AMC and GME followed after. like an afterthought. So I don't think we've seen that yet, and I don't really know exactly what it's going to look like. Some people will say it's Bitcoin. Some people will say it's, XRP. Some people will say it's this or that. I don't really care. To me, a catalyst is just whatever. At the end of the day, if it goes up and hits some of these levels that we've talked about over the last, I don't know, 4 months or so, I'll be happy. I'm not going to be grumpy about it. I'll just move on. And at long term, if it ends up being bullish, we would hold here. But I do find there to be some shred of doubt, in a lot of this, especially when it comes to the December 10th thing. Like, I don't see how you can dilute another 500 million and expect the price to be strong. If the price is already high, it gives them actually more dilution power. So it's possible that could even be worse, but who knows? Then again, if somehow by sheer willpower, I don't know, December 10th, this is actually up high, maybe that means that it's not going to go below 350 or something, whatever the half price is. I do believe in 2000 and there was a dilution right here in like December. It's pretty similar. This is like December 14th. I believe it's the same story, if I recall. I'd have to go back and look, but you guys are like, well, we're going to get a repeat of this? That would be weird. It would be unusual. We've already back tested 4, so it kind of begs the question, like, why? We've already spent all this time down bottom, so to me, this is not as likely as some other things, that it just somehow starts carbon copying the same things. I don't see that as super likely, but like, we've already spent a huge amount of time in the lower portion. So for me, it's like either we're going to pump and dump really fast and then spend time down low, or we should just hit the spring and go and get up high. I don't see why you would do the exact same thing again here. Who knows? I don't have any really more guidance on GME to give. It's the same story, different stock, but same story. It's really out of place right now. It's coming back down. There's a lot of critical moments here in this stock, and I've done the same kind of wave structure here. This one goes out really starting early in November of 2021. It's a big wave. It could be potentially that goes all the way out to, again, November of this year, or all the way out to January. And either one makes sense. As you can see, like, that trajectory down is quite significantly longer than the other. This also goes through November 2022. So it's November 2021, November 2022. And then, November 2023. It's pretty similar. 1, 2, 3. And then it has a pump and a drop, reverses, and then we're on the way out. I guess you look at November 2024, it's like here. So in theory, if you were just using like that very basic, which is fine, there's nothing wrong with that, but if you were just using like really basic, hey, I think this is happening, then it's following quite neatly a fairly regular up-down pattern. But I think that's a bit much to sort of assume that it's going to continue to follow forever. So see, like, that's February right here. Or excuse me, November. That's November right here. And that's November right here. And then November is right here. It's a little high there, but that's where it is. So in theory, like, you'd be like, well, shouldn't November be up here then? I don't know. Maybe. I don't know. I used this bottom. I didn't use November, but if I just use November, I guess I would use the bottom here and the top there on the 20th, which does seem a little more accurate because that's the 20th. That's the 20. Yeah, that's the 20th. That's the 20th. So if I just go to November 20th every year, it's actually a little bit more like a bounce structure. November 20th would be up here around like 60. I wonder how like accurate. I mean, it seems kind of it'd be really surprising if it were like that, but I wonder how accurate that is. Let's go to November 20th. Yeah, that's pretty dang close, guys. It's like almost the same. It's almost the same height. That's it, man. It's official. All you had to do is look at November every year, and you're gonna nail it. Yeah, I mean, maybe. I don't know. November 20th every year, November 16th, 17th every year. I'm giving you the answer. I don't know. Maybe. It's pretty close. I'm very doubtful of that. But, you know, it's still pretty interesting because there is a lot going on there. If you look at this wave jump right here, this is actually a really solid cross of the creek that was established back in November of that year we just talked about, 2021. So it's like building outward this direction. And we've jumped over that. And if you look at where we are again on the rises, we're really close to the end. And that's a macro trend. So it's like right there, you know, it could be in a situation where it's about to try to move again. I've put it out pretty far because that's the way I did this measurement, but in scooting this over to November, I guess you could make that argument that it goes back to like 50, 55. I talked about a triangulation there. I don't know. Wishful thinking, or is it real? I don't know. I'm going to say that a lot. I don't really care, I guess, in some ways, because I'm like, well, I think it's going to go up there. I'm just not sure about the time. And then the concept of like this hitting on these November dates seems kind of odd to me. I'm not really sure what to make of that, because for all we know, that could be true, but this could also just be a triangulation of these 3 Novembers, like, you know, and now it doesn't really matter where it goes, because you already have it intersecting the creek. The uptrend that's built on this November intersects this November. Lots of Novembers, right? All right here. But then who's to say like this has to go anywhere else? It could just be flat. That's a big stretch. So do I think November is a particularly important time? Yes. Do I think that, you know, we might see some run up into November? Possibly. GME tends to run ahead of AMC, but usually just to get to the SOS. So if we were going to be at an SOS, and for whatever reason that did happen around earnings, that would be either at there's not really a great SOS, but it's a creek break at like 29 or up here at like 37 by like December. But that's, again, I'm just kind of looking at things, doodling stuff. This is not necessarily what happens. There's also low possibilities down around 17, 18. So just like AMC has the possibility of kind of dipping down here, bottoming out in the 2s, I think GME could have a similar story going down into like 19 down to 18, maybe at lowest like 1790s. So I don't like catalysts, and I don't like earnings as a catalyst, because a lot of times the catalysts are just very sell the news. I don't really find them to be very reliable. And I got to be straight. I mean, we all know that this is true, that not everybody's right all the time. We get that. But earnings especially has not been a good catalyst. GME has dropped a lot on earnings. It's dropped just as many times as it's run on earnings. It's kind of inconsistent. And if we're looking at it, it tends to do some, like that's a drop, that's a big pop, that's a drop. That ran up into earnings, then dropped. It did go up into earnings, then dropped. This isn't nothing, didn't do anything. This is kind of nothing. Both of these kind of signify top and bottom, or bottom and top, but they just really were more continuation, more the same. The same with this one, bottom, top, bottom, and who knows, maybe a top. I don't find them to be very consistent. And AMC, I'm like, really, this is the only time I can really even see in the last several years, which is May. This is almost the only time I can really see that. And you might say that like earnings here and here were also possibly like good. I mean, they did technically move up after. But the thing is that these are also equal part distances. So it's like you could just chalk that up to like cyclical moves, not necessarily based on earnings, but kind of using earnings as a scapegoat. And this earnings did nothing, just went down. I just don't think it's a great catalyst for AMC. It just doesn't. It doesn't even make sense half the time. Usually, if we're green on earnings, it's like, man, that's not good. And you know what I mean? It's weird. It's like backwards land. These two red earnings come on like a downward pivot. These two green earnings come on like an upward wave. They're very like cyclical, back and forth. And it's almost like the market moves inversely. So like you see how these are two red earnings and we're like high. And these are two green earnings and we're like low. You see the same thing back through here. It's like the green earnings were like high waves and the red earnings were like low. I wouldn't even say that was very good, but there were a lot of push-ups there. Then low again, and then it just dumped again. It's just inconsistent, you know? So that's my opinion about earnings. I don't really think it matters. I'm not going to stream earnings. I'm not going to do that. I'm not even going to listen. I don't care. I'm going to catch the notes later, but I'm just it doesn't matter to me what they say, you know? Like I'm going to look at the bottom line. They're going to say, you know, hey, this is good or not good. Maybe it'll double beat. But it really won't matter. Like if it's green and it sells off, they're just going to say people sold it because they of debt problems, right? If it's green and it rises and goes crazy, people are going to say they bought it because it beat earnings. You know, like there's always going to be some reason. And I don't buy into it. I don't care. And nothing that they've said in the last several years has, in my opinion, sparked any of these moves. They've, in fact, if anything, the only thing that I would say has made any impact is the offerings and the news about offerings. That's it. The debt stuff and other things like that, I don't know. To me, it seems like there's more evidence that there's, again, movement with the market and like what's going on with the market and like whether or not there's people buying this is based on whether or not there is extra liquidity available, right? When they're ready to move it, when it can get the most attention. Yeah, Michael, why do you say stuff like that? It's true that like right after earnings, AMC often sells off, but like directly after it. But to say like it always goes down, that's just not true. This is just not true. Like look at the chart. I don't even know where that's coming from. That's like me looking up or me looking at like a hamburger and saying that is a peacock. It's always a peacock. It's like, no, it's not. It's just a hamburger, you know? You can't just say things and then be true. Of course, that's the world we live in now, isn't it? We just say whatever the heck we want to say. We say it's a fact. This is true, and that is true. That's not the way it's supposed to work. I don't care. I don't care if it goes down after earnings. I don't think that matters that much. Like I said, I think it'd be better to drop than it would be to pop right after. But that's me. I think a pop is misleading. I think it could very easily be misguidance. Well, yeah, I guess. It just depends on your time frame. AMC is a stock that has never recovered after, it really started to sell off. It has a huge pump up at one point, but it's always been in like a downward trend, minus like one period of time. That's true. So, with that information, like, what do you do with that? Because just coming onto a stream, it doesn't matter whose stream it is, just coming onto a stream and just telling everybody AMC always goes down, you should feel bad about it. That doesn't do anything. You're just kind of telling me again that you breathe air. Like there's no response to that. And Michael, as much as he is welcome here, and he's totally welcome here, and I do welcome him, but he has said the same thing since like he's ever come on here. I mean, it's been years. No, I'm not going to be sassy. I'm listening. Maybe. We'll see about the balance sheet stuff. Like I said, I don't know what to expect on December 10th. I'm not really sure where we'll be. These are very opposite. What I'm really looking at is this range right here. Like, this to me is everything, the 320 area. I just can't see it maybe even up to as high as 360. I can't see beyond that right now. I think there's plenty of evidence that this goes to certain places if it breaks down. If it breaks out, I think there's plenty of evidence that it goes to certain places. But I don't think that you can look at this and say with absolute certainty that it's going to do this, or this, and I think that's the tricky thing. We've had plenty of people that have posted Reddit essays about dilution and whether it's good or not. I'm not trying to do that because it's not a question I need answering. Like, it just doesn't matter to me. I don't care. I know that long-term dilution can provide more shares to the market, and if it's a healthy stock, diluting it can actually be fine. It could increase its market cap over time, but the number one thing that happens with dilution is sell-offs. So, like I said, I'm really just looking at key levels, metrics. Anyways, so the concepts here, you can think about it like a wave crashing down and then kind of burrowing in through. I think about it that way, and like, where's the most logical place to come back to? It's really this area of like low liquidity above 540, which makes sense. Maybe 520 because we have the gap there. That's where the ceiling is. It's right in the pocket, and everything else here is just extra. I mean, you can look at it and say, oh, this is going to happen. It looks like it missed. It got red on the chart, so looks like they missed on EPS. They beat a little bit on on revenue. Yeah, last couple times it missed on EPS. Yeah, it didn't even really miss. I mean, it missed on EPS in May. So just for the record, that was a 3% miss. And it didn't stop it from going up. So yeah, I mean, it has missed and dropped before. Not seeing a lot of market movement after the numbers are posted. I don't know. I wouldn't mind seeing a quick drop to like 226. think that we would get our money's worth out of that kind of a drop. It's November 6th. Let me move that guy and see what happens here. Hold on. I don't know. Anytime there's like a gap, I always find it to be a bit debatable. You can kind of go to the top or the bottom of it. I think I'm going to use the closing on the earnings day, though. I think that is more accurate. And that is really where this pinches through later. I also see evidence of that as a supply zone right here. You see the candle down, the wick. Yep, and that's really nice and tight right there for that drop. Although that is higher up. That's at like 1029. This opened up, or it went as high as 936. But that is a better move, I think. So are we in that pocket right now? Are we pretty close? Pretty close. Let me go to that other one too. It could be that it's just a steeper move. I'm just wrong, but the parallels look really good. So I'm trying to use those. Actually, both of those look fine. That's where that other gap is too. So I think those are both pretty solid. This does go up there after and it distributes from that point. Yeah, so we're sitting on it right now. It's quite literally where I drew the drop. So we just dipped it slightly. So I think most of the time that would indicate weakness. Not all the time. Because we're going down into it and it pushed through it, it's very easy if someone wants to take this down, just plop it through there. It's already wasn't held up. 250. So we'll see. Yeah, like I don't want to even really want to keep these lines on the chart right now. I just think that there needs to be a I already know where the markers are. I just don't want to assume everybody knows. This is the most important thing right here, I think. These supports. Support and then support again. If that happens, you'd be in good shape. The low doesn't really make a big difference. I would watch 258. If it goes below 246, then you can mark it off. But then I'd also watch 267. So I think those are the big ones. So if you did get some kind of like a small drop here, and let's say it went through like 243, and then it like comes out and it holds up at like 247 or 246 or whatever. If you saw the reversal, it should look like this. You might get like a last minute drop. And I'm making it super tight because there's nowhere else to put it. Usually there's like a final drop. And that might even go all the way back down to 250, 251. So something like that would work as well, ignoring kind of the timing of it. That could work. It's that subtle, though. It really could be that quick. In theory, it takes 9 to 12 days. So 9 days would put us at the 14th. That's a Friday. drops down into Monday, then on the 17th, you could be moving. We would need to see like this, and then has to break here. Wonder if they do that into like the 5th or something. It's like a little slower than expected, just because of GME earnings on the 3rd or around that point. That's possible. They just kind of position themselves low. I guess we'll find out in the morning. That could make sense. That would be in a good spot if it was already at like 325. It could just take off. No movement on GME at all. That makes sense too. Yeah, I don't know, man. I don't see how you could get up there by that date unless it runs up before earnings. I guess also, without going too into detail here, there is a possibility there's another option at play, which is more to do with, I don't want to get too deep into that. Nah, I don't really want to get into that. Let's forget it. I was going to say this because, but I don't want to get into it too much. No, I don't. That's going to be a whole nother chart. I don't want to do that. All right, I'm done. I hope you guys have a great one. We'll talk to you later. Nah, I'm not going to get into it. I don't know what... I was thinking about the way this bottom hit the top and like that reversal right there, and how that kind of matches out with a pivot, and then I could use like an angle, but I didn't really think that makes sense. Like, I know why I would do that, but it would be a lot to work out. This is pretty simple. And I don't know. Maybe it's right, maybe it's not, but the simplicity of it's attractive, so I almost think this is more accurate, down to like 51. I had found 45 to 54 plenty of times, but just slightly lower may make more sense because yeah, maybe. I don't know. Guess it doesn't really matter. No one's going to care unless it gets there. So, yeah. It's a big if. I don't know. This also feels really logical to me because it's backtesting this big level that we kind of went up to a couple times. But it's also, I'm looking at this parallel and it's like this broke down in stair steps, and they have backtested it once. So it's not impossible that it doesn't go, but if it dipped here a little bit and then went up the other way, it would be in that sweep down and then up over that top, just enough to get you to like 55 or so. That's probably where one of the main liquidity shelves are. It's very dramatically different from what we're talking about at AMC here. It just feels so weak, by comparison. But, oh well. But it is kind of weird because, I'm sorry for repeating myself, but it is kind of weird because, like, if you look at, just think one more thought here really quick. if you look at this like it's a horizontal and you remember where that is, that's November 2021. And what we're really talking about is moving up possibly into this intersection here, maybe, around November of 2025, and that's like about $50. And if you look at that, where that is, again, just using like this red line, I'm not using the yellow line, which I could, but I'm not using it. Just using this red line here, like that's kind of a lower value. That hits like $51, something like that. That consolidation, that breakdown right here is on like November 26, 2021. So it's like horizontally, it's like right across from that. And if you look at where that is here, November 2021, it's where it broke that 4-hour moving average. It's pretty interesting to see that and see where that goes. And like, I'm even just measuring it out like to the 881 here. I know it's not the same number, but isn't that curious? Direction wise, it's really similar to like what happened here. I don't know if you can tell, but that's June. That's the June move, and then there's like a second move right there. So this is very flat. It's like right on top of it, but that's June. And this little consolidation right there in June, $53. On July 2nd, it drops. So that through the drop down value over here. And just looking at it, like that's the same consolidation with the drop down. Really similar. And it almost goes right through that Judge's Earn top. Very, very, very close. Yeah, I know that's a bit of a stretch, but that is very close because that goes to the same marker. Like I know I did that on purpose. I literally put it right there, but if you go to like 891 on that date, so even though they don't look like they're revisiting the same liquidity level at all, because that one's, horizontal, they're really pretty similar. If you think about this as like a hard top, and then it makes sense as to why it would bleed between this creek and this creek, why it would bleed from 350 all the way up to 8. It's just a huge amount of space there. That's really solid. I like that. Like, I think that's a very sensible way to look at it. Like, that's where the resistance is. That's where the liquidity shelf is. If GME made that same move proportionally, just using its own metrics, it's actually quite similar. Very similar. Yeah, if anything, if I had to do anything to change this one on AMC, I might try either the peak here or even like the low here. Or like the drop here. I'm not sure. That's just really low, but that would be like 650, which is another number that we've gotten before. It's not that different. I wonder if they're both kind of possible. Now I really want to explore that, but I'm not going to have time to do that right now. I got to go. But yeah, I could totally see that happening. Either way. It's interesting. I don't know, I'm a very visual person. So for me, like seeing this as a singular, like kind of retracement back to that level doesn't really faze me. I kind of feel like it makes sense. But then I know that some folks will look at it and be like, yeah, that doesn't make any sense. Like, okay. Yeah, and the same breakdowns here exist, which is also really fascinating, But yeah, November, that's really far. If it weren't for that gap down, man, I think that actually might make sense. It looks really close. Look at where if you put it right on the top of the split, it's kind of freaky how close that looks right here. It just looks like it's way low, way below it. I know, I keep saying like one more thing. I want to see where the other chart shift is. Interesting. Very interesting. Wow. I don't know what that makes me feel. It doesn't really make me feel good, but that is kind of freaky. So it's only going to 4, is what you're saying. I don't know. I don't know if I would say that. I would say that then looks like it represents, which is very tight, but it basically represents like a breakout there because we had already done the creek. And if you look at where that wick is that happened in May, it's right on that mark. This actually then follows through with this one really neatly. This follows through with this one really neatly. So all of them are there. And this would be the break over 3, basically like the same thing we're talking about. It'd be the break right here would be the break over 290. It's the same mark. And then this would be the move over 4. But in this time frame, if it can make that move, and it doesn't just completely go splat, then it would be over like the macro creek here. Like there'd be nothing else except for that cross wave. It's the only other thing you'd have to kind of look at like this. So it does give, at least for me anyways, it does give me some sense of continuity there. And like the importance of that $4 mark now and how that relates to everything. It's very significant here. May not be that significant down here. It may not seem like that, which I would agree with. Doesn't look extremely significant there. That's really close. Sorry, I got this angle wrong. Just out of curiosity, let me see something. One more thing. I guess I should have already known that, but that's the top of the gap here. Wow. This chart is crazy. Yeah, getting over 4 is pretty important. 6-year contracts? I don't know. I have no idea what that would be. That's 4 years, though. 2021 to 2025. I don't know. What's 4 years before then? Let's take a look. Should be 2017, right? Yep. It's right here. It's kind of freaky because that's like a very important level. I mean, that's not like that's not even close to insignificant. That's a very significant level. What if they got like a crazy spread, you know? How did you even do this? This is bonkers. This is a weird chart. Man, I'm going to muddy this chart up so much, but I'm going to try it. Let's just use a pitch fan. I'm not going to use I'm not going to use the pitch fan. I'm going to use the regular one. Oh no, this is the pitch fan. So the middle is right there. I mean, those are really nice deviations. That's kind of crazy, actually. I mean, I'm not going to November of this year. I could do that. It's right here. But even that, just looking at that as the middle, it doesn't mean almost anything now. Although that is one of the lines right there. It goes right through the marker. Which one is that? I don't know. Should be this one, the 7.5. Yeah. That's the 7.5. Yeah, I don't know what else I'd say about that. It's kind of out there. I don't know how this would apply either with what we've talked about with valuation. But it is interesting. I always think these things are kind of fascinating. Look at where the red marker is right here. That's right at 4. And then look at the next one. It's right there at 8 something. So, I mean, in terms of like mathematical deviations, it's pretty tight. It just needs to hop over 4, which is the same number we were just talking about using completely different methods. So, I mean, it is fascinating nonetheless. But no, I probably would never do this again. I mean, it looks good here. I don't really know what to do with it there. Everything looks fine until this point, and then it's like, I don't know. What I do like about it is it does make me feel that there's a lengthening to it all. There's a longer term movement, which I'd found previously is a possibility. That just takes a long time. Oh, even this peak to this peak is really close to where we're targeting here. Although this suggests that you wouldn't hit it till January. That it's not really, I mean, it's a fib, it's a 786 fib, but it's a 786 on the bottom side of this gigantic. You know, we're using some decent numbers as like the level, but I'm really kind of just using that bottom at like 67, which I'm only using because it's November 20th. So it's 20th to about the 20th, roughly. I don't know, I was just checking it. So if the question is, could it be like a multi-year cycle kind of thing? Like, I don't know. It's a bit of a crazy one if it is. But I'd be lying if I said this didn't establish some pretty straightforward levels. I mean, I'm pretty sure that's where the Judge Zern thingy was right there. It seems pretty good. I wonder if I should do it. Let me just double check something real quick. I'm not going to use a pitch on it. I'm not going to do like this. I'm going to use just a straight up and down. It's logarithmic, so it may not matter. I want to just see. Yeah, look at that. That's the big creek jump. What? That's crazy. What you talking about, Booksy? Look, just bear with me. This is actually really cool. That's the same angle. That's where the it's really interesting. That's where the November bottom is. And then look at that. It goes right through the top at 1330. And then look where it lands later. That is super tight, guys. I wonder if, yeah, I wonder if November, there's something about that. 4 year, 4 year. That's crazy. It's confirmed. We're going to be at $7.98 or whatever on November 20th. I mean, if that's true, we should be right there. I mean, it'll look really good. That's a cool chart. Why did we do that? Because of GME. We did it because GME might look like it goes back to that same value just based on that. It's like symmetry. But then I did the same thing here, but downward. And interestingly, it still marks very much the same area. So then I went back another 4 years. And that is where I said it earlier, I thought maybe that's where the operators got in. Yeah. I don't know, man. I have had a sneaking suspicion for a while. I looked up 13F filings way back. And there was just something about this area. I thought that's where the shorts really entered the play. And it changed. There's a huge influx of volume in this area too. That's fascinating. Let me get rid of all these like little creeks. Let me just see something real quick. Let me get rid of these like extra ones. I can't really see it very well. What? That's pretty flippin' wild, guys. Look. What? Why does that work so well? What is this number? What is going on? Alexa, turn off the timer. Was that for you? Okay. So, are you done yet? I'm almost done. That's Wednesday the 24th. I'm not positive that you should use that date, but that's the one I used. It's really where it dropped through that 4 hour. That's wild. Yeah, and there's Wednesday the 22nd right there. So we're certainly like very, very close. That's insane. This kind of hurts my brain a little bit. What the heck? And it went under. It went right to that. That can't be accidental, right? This is 787 on the 20 on Wednesday the 26th. If it's really going to happen, that it triangulates it, which would be really bizarre. 787. Why that number? That's really close to the number that I had on the screen before. I took it off as like a lower mark. I don't know. There's a weird little gap there. There's a little gap down right here, right off 786. I suppose that could have been like the consolidation level from over here. So, I mean, it could make sense. It marked it off as such. That's pretty wild. All right. I am done, though. I got to go. So, you guys have a good one. We'll talk to you later.